All right, let's dive right in. We are looking at a really pivotal moment for Bitcoin. It's October 2025, and the price? Well, it's at a serious crossroads. The big question on everyone's mind, is it about to launch to brand new highs, or are we looking at a sharp correction just around the corner? The charts have the clues, so let's break them down.
And this, right here, gets straight to the heart of the matter. Bitcoin's had this absolutely fantastic run, but now it is staring down a huge wall of resistance. So, does it have enough momentum left in the tank to just smash right through it? Or is this the spot where the rally finally runs out of steam?
And look at how tight this situation is. The price is just hovering around $123,000. But that major line in the sand, that resistance, is at 124,720. We're talking less than a 2% gap here. It's a real knife's edge, with the bulls and the bears in an all-out battle for control. Okay, so here's our game plan. First, we're going to look at all the bullish signals. The stuff pushing the price up. Then we'll cover the warning signs that are trying to hold it back. After that, we'll map out the key price levels to watch, and we'll wrap it all up with 3 possible scenarios for where Bitcoin goes from here. First up, let's look at the case for the bulls. You can think of these indicators as the allies fighting on Bitcoin's side, really providing the firepower for a potential breakout.
So, our first ally is the RSI, the Relative Strength Index. Now, in simple terms, this tool basically measures market momentum. It's telling us how fast and how much the price is moving. This helps us see if an asset is maybe overbought and due for a pullback, or if it's oversold and could be ready for a bounce.
And if we look at the data right now, Bitcoin's daily RSI is sitting just under 66. Now, this is a strong bullish sign. It shows there's really healthy buying momentum, but, and this is key, it isn't in that overbought zone above 70 just yet. That suggests there's still some fuel left in the tank for another push higher.
Next up, we've got the MACD. This is another momentum indicator, but what it's really great for is confirming the direction and the strength of a trend. It's essentially just tracking the relationship between 2 different moving averages of the price.
And guess what? The daily MACD is telling the exact same bullish story. The MACD line is above its signal line, and most importantly, that green histogram is getting bigger. That doesn't just mean the momentum is positive. It means the upward momentum is actually accelerating. It's getting stronger. And our third and final ally here is a classic formation, something traders call the bullish stack. This is what happens when the price is trading above all the key moving averages, the short-term, the medium-term, and the long-term ones. It is a textbook sign of a healthy, powerful uptrend, and it shows us that buyers are in control across the board. Okay, so the bullish case looks pretty solid, right? But hey, every rally has to face some obstacles. So now, we've got to flip the coin and take a serious look at the warning signs that are flashing on these charts. And right here, this is the single biggest conflict in the charts. While that daily RSI looks perfectly healthy at 66, the weekly RSI is at a blistering 91. That is an extremely high reading. It's a huge signal that, on a longer-term scale, the market is incredibly overheated and at a very, very high risk of a big correction, or at the very least, a long period of just going sideways to cool things off. Another major obstacle is something called open interest. Now, this simply represents the total value of all the open futures and options contracts out there. When this number gets really high, it means there's a ton of leverage money betting on where the price is going to go, and that can dramatically ramp up the volatility. And right now, that number is sitting at around $90 billion. That is a massive amount of leverage in the system. It means that any sudden price move, I'm talking up or down, could trigger a huge cascade of liquidations, which would just amplify the move and create some extreme volatility. It's basically a powder keg just waiting for a spark. And finally, let's take a peek at market sentiment. The Fear and Greed Index is sitting firmly in greed territory. Now, while that confirms the bullish mood, it's also a bit of a warning sign for contrarians, because when everyone is greedy, the market becomes really vulnerable to sudden shocks and people taking profits really quickly if the price starts to stall. So, we've got the bullish allies on one side and the bearish obstacles on the other. Now let's define the actual battlefield, the specific price levels where this whole fight is going to be won or lost. This price ladder maps it all out perfectly. Up at the top, you've got the ceiling, that 124,720 resistance. Below that is where we are now, in the middle of the battle. The bulls' first line of defense is down at 112,017. If that breaks, their last stand is at 111,549. A daily close below that level would be a pretty clear signal that the bears have taken control. Okay, with the battlefield all mapped out,
Let's look at what could happen next. Based on all of these conflicting signals, the analysis really points to 3 possible futures from here.
So at a high level, the source material gives a 45% probability to a bullish or risk-on scenario. Then there's a 35% chance of things just kind of consolidating sideways and a 20% chance of a bearish, risk-off breakdown. Let's dig into what each of those actually means.
The most likely scenario, risk-on, gets triggered by a decisive daily close above that critical 124,720 resistance level. If that happens, it would confirm the breakout and really open the door for a powerful move up with initial targets somewhere in the $130,000 to $140,000 range.
The second possibility is that the price just fails to break through and instead enters a period of sideways chop. We'd probably see it bounce between support around 112K and that resistance at 124.7K. This wouldn't be bearish, not really, but more of a healthy cool-off period, allowing those overheated weekly indicators to reset before the next major move.
And the least likely, but still very possible scenario is risk-off. This would be triggered by a daily close below that key defense line at $112,000. This would confirm a breakdown of support and would likely lead to a deeper correction, with targets down in the $105,000 to $108,000 zone. So to bring it all together and boil it down, the daily indicators are bullish and they're screaming, go. But the weekly RSI is dangerously overheated, screaming, whoa, slow down. This massive conflict puts all of the focus on one single critical level, $124,700. That is the line in the sand. And this quote from the source analysis really sums it up perfectly. The overall technical picture does favor the bulls and a continuation of this uptrend. However, and this is the most crucial point, nothing is confirmed until we see a decisive close above that 124.7K level. And that leaves us right here with our final question. The bullish and bearish forces are in this incredibly tense standoff. The key levels are all clearly defined. You can feel the market is just coiled, ready for a huge move. The only question left is, which path is it going to take?